Hi, Paul. How are you?
Okay. Now can you hear me? Testing 1, 2, 3.
Can you get connected okay to the audio?
Are you talking to me? Can you hear me?
I cannot hear you.
How about that? Can you hear me now? Can you hear me?
Yes, I can hear you.
Yep, I'm still not getting anything. Hold on a second. It would help if I turned my own volume up. There we go. There you are. Sorry, I just realized I was in a meeting and had to disconnect my system earlier. So,
okay. So can you hear me
there we
now?
go. It's not you, it's me.
I'm getting some feedback. I'm hearing myself like 2 seconds afterwards. I wonder if that's maybe somebody else has their audio on. Oh, there it went away.
Okay. And I see Brooke is joining. Hi, Brooke.
Hello.
Alrighty. So I am going to just probably throw this PowerPoint slide up here. Paul and Brooke, will either of you be doing a presentation, like a
Yeah, I've
formal
got a
PowerPoint
PowerPoint.
slide? Or...
Yeah, and I was
Okay.
going to test to see what the transition might look like.
Okay, let me stop sharing and see if you can share.
Okay.
There we go.
I want to see, do you see the presentation?
Yes,
Yes.
I do.
Okay, not the native slides, but the actual presentation. Okay.
It's in full slide presentation mode. Yep.
Yep. Okay. I'm not going to touch it then.
Don't break it.
You probably need me to stop sharing, I would imagine.
Yep.
So yeah.
There we
Okay.
go. I'll just have to do a few little walkthrough here, and then we'll be good to go.
Okay. And I see where to share. So I'm set whenever you want us to get going. And chances are Brooke and I may, I'll leave it up to you. If you need Brooke and I to turn off our video, we can when we're doing the talking. That's fine. That might help with bandwidth.
I think we should have. I think we've been okay on bandwidth, so
okay.
Shouldn't be too big of an issue. But if anything arises, thank you for that offer.
Okay.
I already shut mine off for right now.
Okay.
Just going to give it a couple more minutes. We're at 14%.
I can't hear anything. Is anybody talking?
Not yet, Arlene, but we can hear you.
Okay, then I'll go.
Okay. Alrighty, for sake of time, it's 12:01, so let's go ahead and get started. Good afternoon, everyone. I'm Stacy Mueller. I'm the president-elect for Northern Colorado Crew chapter and director of economic development for the town of Windsor. Thank you for joining us today for our special presentation on PPP. We look forward to hearing what Paul and Brooke have to say on this topic. And as most of us are settled into our homes, home offices or kitchen tables and hall closets, it's important than ever to stay connected and informed. We appreciate your commitment to business and your personal professional development and your clients by being here today. Before we begin officially, I want to provide a warm welcome to our crew members who are on the call today, as well as our guests who are joining us this afternoon. If you aren't familiar with Crew, let me fill you in on what great organization this is. Our mission is to transform the commercial real estate industry by advancing women globally. And we do that through a variety of avenues, from networking and deal-making events to monthly education luncheons like this one, access to deep connected network of more than 12,000 commercial real estate professionals across the country and beyond. And contrary to popular belief, we do allow men, and I think I saw Joe on our call. He is one of our members and was a board member for many years as well. So we do allow those into our group. And if you'd like to learn more about our organization, our events and our member information, please visit our website at www.crewnortherncolorado.com or just ask to speak to any of our board members. So I'd like to share our screen here really quick and just say a big thank you to all of our sponsors who make all of our events possible. As you can see, our premium sponsors are First Bank, Brinkman, Peter Schulte, Odell, and Wadsheen, LLC, trial lawyers, the town of Windsor. You can see our classic sponsors, American Family Insurance, Cindy Girk, Fidelity National Title, First American Title, Heritage Title Company, Sperry Van Ness, Denver Commercial, Independent Financial Bank, Otis and Beddingfield, Realtek, Lamprey Nearson. So couple of housekeeping items before we get started. We'll probably keep all your lines muted, just so you know, and please include any questions you have for our speaker in the chat box below. We'll be monitoring those throughout the presentation. We'll have a Q&A at the culmination of today's program. The information shared within is intended for those of the real estate profession, and all content is officially off record. As a member of if a member of the media is on this call, please contact me to be directed for an official response. So without further ado, I'd like to introduce Paul Mueller, CPA from Mueller Pye and Associates, CPA. And I'm gonna stop sharing so you can share your screen, Paul. Welcome.
Thank you, Stacy. Make sure I share the right one here. So let me know if I've got the right one. Stacy, I don't know if you remember, Teresa and I, my wife Teresa and I, we moved to Northern Colorado in 2008, and we launched our firm on Halloween Day of 2008, and it's been all treats since then. Very few tricks except for 2020. Seems like it's all been tricks this year. Stacy was one of the first people we met moving to Northern Colorado. At the time, you were with the Northern Colorado Economic Development Corporation. And in fact, I'll give a little shout out for Stacy. As Teresa and I were moving to Northern Colorado and creating our firm, we had this idea: could we create an internship program to help give local community college students an opportunity to get into the accounting profession? Typically, community college students are non-track, non-traditional type students, and Teresa and I were both community college products, and so I can't remember how we got that into the conversation, but Stacy said, well, have you talked to the people at Front Range? And we did, and we've had a 10+ year, very positive relationship with Front Range Community College, benefiting their students as well as benefiting us during our busiest time of the year. So Stacy, I don't think I ever shared that with you, but I just, now that I had the opportunity, I want to let you know, it's those chance encounters, it's those chance meetings that sometimes create legacy type initiatives. So I wanted to give you some kudos and a shout out because you really helped us achieve one of our objectives as newbies to Northern Colorado, and it's paid dividends ever since that time. So thank you for that. Today, Brooke, Hupp, and I are going to talk a little bit about PPP loans. I mean, what else is there to talk about in 2020 besides PPP loans? It seems like that's all we've been living, eating, and breathing the last 6 or 7 months are the PPP loans. And this morning, as I was finalizing some of the slides I was going to furnish, I added this thing about maximizing your loan forgiveness 3.0. Well, why 3.0? It seems like I think we're on our third iteration of what PPP loans are and what forgiveness opportunities there are out there. So I just thought I would share that a little bit, that I think we're in 3.0, and frankly, we're probably looking for 4.0. So stay tuned. The information we share with you today is good for today until SBA, Treasury, or Congress changes the rules again. So sit tight. There might be some more changes coming. Just to lend some historical perspective on this thing called the Paycheck Protection Program that now everybody calls PPP. This started out, actually, the original version of the PPP loan program contained in the CARES Act called for a 0.5% interest rate on these loans. And I think Debbie Davis must have contacted Congress and had them double it to 1%. So y'all can thank Debbie for the 1% interest rate that we have on the PPP loan program. The loans were calculated at 2.5 times the average monthly payroll expenses for an employer in the preceding calendar year. The original program allowed for 2 years to repay any loan that wasn't forgiven. Obviously, the primary goal was to have these loans, most if not all, forgiven. You didn't have to start making payments until 6 months after you got your loan, which for most of you would be just about right now, but we're going to talk about that a little bit later in this program. So don't be sending any payments to the bank anytime soon. And this forgiveness was originally based on an 8-week period of time and depended on how much you spent during that 8-week period of time on things like payroll, rent, utilities, and mortgage interest. Well, that's where things got started, and the program is entirely different today, and we'll talk a little bit about some of those significant changes to the program. This gives you a little bit of idea about the chaotic life that we've been living, and many of you have been living over the last 6 or 7 months. When you look at this PPP loan timeline, it all got launched on March 27th, and it's been a continual litany of changes, new guidance, changes to the guidance that was originally given, and changes to the guidance that was changed. And we kind of laughed in our office as we were doing webinars all throughout this pandemic period. It seemed like no sooner did we do a webinar and give some advice that, daggone it, the SBA would issue a new announcement that totally made obsolete what we just said. And we'd have to start talking about our next webinar to clarify that updated guidance. So I'm not going to go through this timeline. You all can read this in detail. What's interesting, though, is we did just have the big change 2 weeks ago on October 9th, where the SBA issued a blanket forgiveness application for PPP loans less than $50,000 or less. And I'll jump into that and talk about that, because I would imagine that rule probably applies to many of you on this phone call. And if it doesn't, because maybe your loan was more than $50,000, we'll talk about that too. Primarily, we are still holding out hope that Congress will enact a proposal that was put forth over the summer for the SBA to issue a blanket forgiveness of all loans under $150,000. We're not there yet, and we'll talk about that in just a little bit. I would imagine that some of you on this call are probably self-employed, and so I wanted to make sure that we did touch on some of the special rules that apply to self-employed taxpayers that were applying for PPP loans. this was a tremendous area of confusion in April when this program first rolled out as to whether self-employed people could actually apply for loans. In fact, the original CARES Act language indicated that a borrower who hired independent contractors, that borrower could use the amounts paid to those independent contractors in determining their PPP loan. And at the last minute, really early April, just before the program went live, is when SBA came out and said, you cannot do that. Those independent contractors need to apply for their own PPP loans. And man, did that throw a wrench into some of the calculations and assistance we had provided to some of our clients in the construction industry and other areas that rely on subs and independent contractors. It really threw us for a loop when that happened. But they did finally, come out with some guidance that self-employed individuals, those of you that are maybe filling out a Schedule C in your personal tax return, that you could apply for your own PPP loan. And at that time, the maximum loan that you could apply for was $20,833, assuming your 2019 Schedule C net profit was $100,000 or more. That was the formula that determined how much self-employed people could borrow. So, some of you on this call may be in that space where you did qualify for that loan, and maybe you did qualify for the maximum loan of $20,833. Now, when these rules came out in April for the self-employed, what they provided was, of that loan, $15,385, that's the maximum amount, qualified for automatic forgiveness. And then if you could show that you incurred rent, utilities, and interest costs for the additional $5,500, you could get that amount forgiven as well. That was under the old 8-week spending period that was in the original CARES Act. We'll talk about the Flexibility Act that was passed in June that expanded that spending period to 24 weeks. And so for those of you that are self-employed, if you were looking at that 8-week number and thinking, I'm not going to get this loan forgiven, the 24-week period took that off the table, and you're going to get your loan totally forgiven. So I wanted to touch on that one because, boy, this whole issue of how self-employeds operate under this PP loan umbrella was subject to a lot of confusion, a lot of change. But at the end of the day, the good news is you can expect your loan to be totally forgiven.
Paul, we did have one question.
Yeah.
Someone's wanting to know that if there will be another opportunity to apply for the PPP loan. They did not get one previously.
Yeah, so the PPP loan program expired right about the end of July, early August. And so right now there is no PPP loan program. There was still a significant amount of money left over that did not get borrowed out of that program. And so there is talk in Congress about maybe reviving the PPP loan program with the money that was not lent out. There's been talk about a targeted PPP loan program for certain industries like restaurants, hotels, airlines, the industries that have been severely impacted by the pandemic. But again, there's just too much on the plate. There's too much noise, frankly. And I really think we've got to get past the election and get that behind us. And then, during that 2-month lame duck session in Congress, we might see some of these items actually get enacted into law. But there's too much emotion, too much noise, too much going on right now in Washington to for anything to happen in the next couple of weeks. And that's why I said earlier, stay tuned. If anything can be depended on, it's going to be change in this program.
And definitely your banks and lenders will know when that comes available.
Yeah.
Definitely be in talks with them because they're going to know when it's available.
Yeah, and I want to talk about that in a little bit too, about your relationship with your PPP loan lender. But let me touch real quick on this thing about the PPP Flexibility Act. This was passed in early June by Congress and really was in response to some increasing angst among PPP loan borrowers about the possibility of massive repayments of these loans that weren't going to be forgiven, particularly for companies that weren't able to operate during that 8-week, that original 8-week spending period. And frankly, around Memorial Day, it was looking like this PPP loan program was going to be a disaster. However, with the noise and the lobbying and everything that took place, Congress did pass this act, the PPP Flexibility Act, that really liberalized and really opened up this program, that, you know, if you don't get most or all of your loan forgiven, you were just asleep. So, you know, a couple of things that happened. They extended that spending period from 8 weeks to 24 weeks. That was really in answer to a lot of these businesses, and I'm thinking like a lot of Estes Park businesses that really didn't reopen much at all until the end of May or June. Without this extension of the spending period of 24 weeks, there were a lot of Estes Park PPP loan borrowers that were facing massive repayments of these loans, and they'd already spent the money. So, you know, they were really looking, staring down the barrel of a gun. So the spending period was tripled to 24 weeks. Some of you may recall with the PPP loan program, there were all these adjustments that if you reduced your workforce, your head count went down, you reduced people's wages, that may count against you in terms of having your loan forgiven. They opened up a lot of these exceptions for that, you know, for employees that refused to come back to work, or your business just didn't get to the same level it was pre-COVID, and therefore you couldn't bring these people back. Anyway, Congress was creating all of these outs that to minimize the chance that your loan wouldn't be forgiven. You might remember in the original program that the payments were deferred for 6 months. In the Flexibility Act, they extended it even further and said payments are deferred until 6 months after the SBA tells you how much of your loan is forgiven. So that, for many borrowers, that pushed the first payment out well into 2021 before any payments would have to be made. Again, I'm going to talk about, there's a trap here, and I'm going to talk about that a little bit later in my program, so stay tuned. They also opened up and allowed PPP loan borrowers to qualify for what we refer to as the employer payroll tax deferral. I'll get into that a little bit later as well. But I'll just leave that there. Not sure how helpful this is going to be for everybody. This, in a PowerPoint slide, this turns into an eye chart. And Stacy, if you're going to, if you want to share this PowerPoint presentation with folks after this program, I'll send you the file and you can do that. I also know you're recording this, so people may be able to refer back to this in the recording. But this summarizes a lot of the changes that the Flexibility Act made to the original CARES Act PPP loan program. So you'll see there on the top line that the repayment period was extended from 2 years to 5 years for these loans, particularly for loans that were made after June 5th. The so-called parachute date by which you could restore your headcount and restore your wages to full pre-COVID levels was extended from June 30th to the end of December. As we said earlier, that spending period went from 8 weeks to 24 weeks. And then probably one of the biggest changes was that percentage of the funds that had to be spent on payroll in order to qualify for forgiveness was dropped from 75 to 60%. And so that allowed folks that were maybe limping along on a reduced workforce, but still having to pay full rent to a landlord to enhance their ability to achieve full forgiveness as well. So, what we've been counseling our clients all along during this entire PPP loan program and some of the changes in progress in this program, we've always said there were two key elements to achieve maximum forgiveness, and they came down to knowledge and patience. In the area of knowledge, it's important for you to understand what is your lender's process for processing these forgiveness applications, because some lenders have online portals. You've got to use that. You've got to use their tools to apply for forgiveness. Others are saying just fill out the SBA forms and send it to us. What kind of documentation is your lender going to require? Do they need W-2s, payroll reports, tax returns? transaction reports out of QuickBooks, receipts. Again, every lender has their own process. And so, we've normally been fielding those questions from our clients who borrow these PPP loans. And we've had to say, look, you really need to have that conversation with your lender because they're driving the train at this point. We can help you assemble that information, but it's the lender that's really driving what it is they need. And then also keeping track of your qualified spending to know whether you're on track to achieve forgiveness or not was always important in terms of that knowledge aspect. Besides knowledge, the other thing is patience. And we've really been counseling clients to go slow on forgiveness because the program's only getting better and better with time. Again, like I said, 2 weeks ago, the SBA arbitrarily came out with this blanket forgiveness for loans of $50,000 or less. Who knows that they might come out with something next week with a higher threshold. And again, we're hoping Congress will issue a blanket forgiveness for $150,000 for loans up to $150,000. So really use time to your advantage. There is no rush to apply for forgiveness. In fact, you have 10 months after the spending period to apply for forgiveness. So go slow, don't rush because things might get better for you the longer you wait. And we think there's some ways to, in how you're doing your accounting that may enhance your opportunity for forgiveness. So Brooke, this is your bailiwick. I'm going to turn this over to you to share some ideas.
Okay, so as Paul said, definitely want to follow your lender's guidelines. Every bank, they're all may have different ways and things that they're asking for. So you definitely want to be in contact with them so that you're giving them what they need. Definitely don't want to be spending time giving them more than they're even going to ask for. So definitely be in contact with them. When you originally got your loan, if you haven't recorded it already, we recommend going ahead and recording that as a liability on your balance sheet. Until you know that money has been forgiven, it is a loan. And so we want you to record it on your balance sheet. You just, if in QuickBooks, just go ahead and set up a new account and put it down as a other liability for right now and just leave it there until you get that final word back on forgiveness. As far as, so there's the 4 categories that go into your forgiveness that they're tracking. It's payroll and related costs. You get to include rent, utilities, and mortgage interest. And all of those are for the spending period. So from when you received your loan, it's either going to be out 8 weeks or out 24 weeks. So you're going to need to be able to produce reports showing those. And honestly, the easiest way to do that is if you go in and print a P&L out of your QuickBooks or whatever accounting software. We use QuickBooks here in our firm, especially QuickBooks Online. So I'm kind of going to talk to that. But when you print a P&L in QuickBooks or QuickBooks Online and have it up on your screen, when you go to the rent and put it in for the date you got your spending period, when you click on rent, you can click on the number and that will open up another window which will give you all the detailed transactions that make up that total number. Same thing with utilities, your mortgage interest. So all that's going to be, you can get them right off your P&L. One thing I do want to state, and Paul, if I'm wrong on this, definitely let me know, but the rent and your mortgage interest, you got to make sure it's during the period, like your rent needed to be a lease that was already in place prior to. So if you went out and got a new office space in April and didn't have that lease in place ahead before you got your PPP money, that might come up into play. But then for your payroll, what I'm recommending for that is whatever software you're using or payroll company you're using, run a payroll report with your spending period from the beginning till the end, and that's going to give you all your costs right there. So other than going in and setting up new accounts, I honestly think this is just going to be the most effective way to pull those numbers for your lenders.
Yeah, and when you, for instance, in QuickBooks Online, Brooke, if you click on the rent number in the P&L and it pulls up the detail, you can run that transaction report then from the beginning of the spending period to the end of the spending period. So you're only looking at those applicable transactions, right?
Correct. Yep. And if you do your P&L with those same dates on the P&L, it's going to bring those same dates over to that transaction detail screen as well. So you
and
can
that's
carve
kind of-
out, because it's, especially payroll kind of confuses people a little bit, because if you pay every 2 weeks and then you paid them, you know, 3 days after you got your money, but people get confused if that was for work done before you got your money. It goes by your paycheck date. And so that's what QuickBooks goes by, when it'll pull it in by those check dates as well. And then, you know, again, Paul said earlier, we don't know exactly what they're going to ask for. So if you have invoices, receipts, you know, your lease that shows that you had the lease, definitely have that stuff handy. Stick it in a folder or set up a folder on your desktop so that when the bank, if they ask for that, you can just shoot it over to them really quick. I mean, that's going to be your best. Start gathering that stuff in case you need it.
And Brooke, I'm thinking like with these transaction reports, say you run a transaction report for utilities for that 8-week or 24-week period, that's going to list all of the detailed transactions. You know, I'm thinking in terms when you submit all of this information to your lender, that transaction report kind of serves as a lead schedule, and then you can have all those supporting invoices back behind that schedule. That's going to make it so easy for the lender to process this thing, get it shipped off to SBA, and get them to come back and tell you, you know, you're good for forgiveness on all this stuff. So
yeah,
really that accounting software, those accounting records can make it oh so easy to apply for forgiveness.
absolutely.
So Brooke, we have a question for you. And I don't know if you guys prefer, and I apologize, I should have asked you this. Usually we'll save all the questions to the end and then ask you guys, but
Stacy, I love the instant interaction.
okay, great. So Mary Jo Bruxius, I apologize for murdering your last name, Mary Jo. But it says, what if you don't use an accounting software?
Then I don't know what you're using. If you're using Excel, it doesn't have to be accounting software. You're just going to have to be able to track those payments. So if you're not using anything, I would recommend going through your check register, you know, logging into your bank. If you wrote a check, I guess you could print, you know, you're going to have to make something up and list it out. Okay, rent, I paid rent March 1st, April 1st, May 1st, here's the amounts, attach the lease. You're just going to kind of have to manually put something together.
And something I want to throw in here, because, you know, for folks on this call who are self-employed, who are filing a Schedule C with their personal tax return to summarize their income and expenses related to their self-employed business. You know, one of the questions we had for a long time, I know some of y'all work out of your home. Almost all of us work out of our homes now. But for those of you that are self-employed working out of your home with an office, many of you are probably claiming a deduction for office and the home expenses. And so one of the questions we had for a long time that seemed like it took forever to resolve is, to the extent your home office expenses include a little bit of rent, a little bit of the utilities, and a little bit of the mortgage interest, would that qualify? Would those expenses fall into these categories for forgiveness? And the answer is yes. So, you know, if your annual utilities are $10,000 and 10% of that's allocated to your office in the home, that's $1,000. However much of that $1,000 fell within either that 8-week or the 24-week period, that's going to be something you can add into the forgiveness calculation. Okay, Brooke, anything else on the accounting side?
I think that's all that we had. Again, whether you use a software or not, it's just, you're going to have to be able to produce something to give to the lenders showing those payments so that they can have the history for your forgiveness.
Okay. So let's talk a little bit about the forgiveness application process. Like I said earlier, you have until 10 months after the spending period to apply for your forgiveness. So time is on your side. Time is your friend on this. We said earlier the first payment, if any, because maybe you didn't get the whole loan forgiven, is deferred until 6 months after the SBA makes a final determination of your forgiveness. Now, what does that all mean? So you've got 10 months, up to 10 months to apply for forgiveness. Your lender has 90 days to process that application, and the SBA has another 60 days to finalize and approve that application. So you're talking, say your spending period ended today, you would have up to 15 months before you knew whether you owed any money. 6 months on top of that, that's 21 months. So conceivably, you wouldn't have your first payment, if in fact you had a payment due on this loan, you wouldn't have a payment due until, say, July, August of 2022. So again, there's no rush here to apply for forgiveness unless you know for sure 100% of that loan is going to get forgiven. As we said earlier, these forgiveness applications are filed with your lender. They are the ones in charge of the process right now. There's a couple of different forgiveness applications that have come down from SBA. The latest one on October 9th was what they called the Form 3508S. Not exactly sure what S stands for. Maybe it's just simple. I don't know. But this is the form that you use if your loan was $50,000 or less. It's a very simplified form. I don't know if I'm going to be able to bring this up. Let's see. Stacy, I'm going to try to stop sharing and then share this new form. So this is the form that the SBA came out with 2 weeks ago. You'll notice I've highlighted at the top. This is for loans. If your loan was $50,000 or less, this is the loan you can use. If you've looked at the other versions, and I do have those here, I'm just not going to get into them. If you have looked at the other versions, you'll know that it asked for a lot of math. It asked for a lot of schedules. It asked for a lot of computations. This form, if your loan is $50,000 or less, is 1 page long. This is it. This is all you need to put in. Just some basic information about your loan. Sign off on these 7 certifications that you are good with the money. Sign it down here at the bottom, and you're basically done. You're basically done. Your lender is going to ask for some proof of how you spent the money, receipts, payroll records, some of those things we talked about earlier. But this is 1 page, and you're pretty much done with the process. So let me go back to pick back up on the presentation here. So, if you're self-employed and had no employees, well, I know for sure your loan wasn't more than $20,833. So that form 3508S is perfect for you. If you do have employees and your loan was $50,000 or less, again, that form 3508S is perfect for you. I think you could probably go ahead and file that application. Now, if your PPP loan was between $50,000 and $150,000, I would tell you to hold on. Let's wait. Let's see if Congress extends that blanket forgiveness up to $150,000. Chances are SBA will come out with a new form for that. So hold off. Wait for that. And if your PPP loan was more than $150,000, I've given you a notation here, our website. We have a COVID resource page on our website that has calculators to help folks calculate how much that it appears they apply for forgiveness. We've got a whole bunch of other resources out there, and we continually update that as we get new guidance from Treasury, SBA, or Congress. I would tell you, if your PPP loan is more than $150,000, God bless you. You're going to have a lot of work involved in applying for your forgiveness, but you know what? At the end of the day, it's probably worth it. So I'll just leave you with that. There's some other things that we need to consider with this whole PPP loan program. Some of you may have gone out and gotten your PPP loan, but maybe you applied for one of those, what we refer to as an EIDL emergency grant. EIDL is a SBA loan program. It's the Economic Injury Disaster Loan Program. It's been around for a long time. It was not a COVID item. In fact, when we had the floods in 2013 here in northern Colorado, a lot of clients, particularly up in Estes Park, applied for these economic injury disaster loans. The thing that was unique about COVID is they came up with these things called the EIDL emergency grants. So you could begin the process of applying for a loan, but there was a point where you could stop and say, just give me a grant. And these grants were based on the number of people in your workforce. You were entitled to a grant for $1,000 per employee up to $10,000. Now the grant didn't go to the employees, the grant went to you as the employer, but it was capped at $10,000, the maximum you could get as a grant. So if you got both, if you got a PPP loan, say $50,000, but you also got a $10,000 EIDL grant, you'll get $40,000 of your PPP loan forgiven. You'll have to repay that. You'll have to repay $10,000 because the government viewed that later. They didn't tell us in advance, but they viewed that later as a double dip. So if you did get that EIDL grant, just bear in mind that part of your PPP loan will not be forgiven and you'll have to repay that part of it. You don't have to repay the grant that you got to keep, but it's going to eat into your forgiveness of the PPP loan. The second thing that I referred to earlier is this thing we call the PPP loan repayment trap. So if you look at your PPP loan promissory note, your loan document, it probably says, based on the old language, that you have a payment coming due just about right now, or maybe November, depends on when you got your loan, because that was the original 6-month deferral. Well, as we've told you, that deferral has been kicked way off up to about 2 years from now. So one thing we found out last week is SBA is saying, if you go ahead and follow that original loan document and you go ahead and send a payment in for your PPP loan, we're not going to forgive it. We're not giving that money back to you. So we refer to that as the loan repayment trap, that, for instance, you got your loan and maybe you set up that first payment on an auto pay basis. Make sure you go in and intervene on that, because if you send that money in, it's not coming back to you. So be careful about that trap. The other item is what we refer to as the tax trap for PPP loan forgiveness. And this has recently started getting some publicity now. In the original CARES Act, back in March, there was express language in the statute that said the forgiveness of the loan will not be taxable income to the borrower, which we thought that was great news. Then the IRS came in right at the end of April and said, hold on a second. If you use this tax exempt money, these tax exempt loan proceeds to pay payroll, rent, utilities, and mortgage interest, you're using tax exempt money to pay those expenses. You're not going to get to deduct those expenses. And so it turns into a backdoor way that, to the extent your loan is forgiven, you're going to have to pay tax on that income. Now, let's remember, you didn't have to pay the money back. So certainly it's, if you had to pay tax, on that forgiven money, that sure is a heck of a lot better than having to repay the whole loan back. So the Treasury saw that as an inadvertent double dip in the CARES Act, that, you're getting tax-free money and then being able to deduct those expenses was kind of a double dip. So the forgiveness is not taxable, but those expenses paid for with that money aren't deductible either. So a lot of people are going to be surprised about that when they do their 2020 tax returns, when they see the tax impact for that. So just be prepared for that. Now, there's always a chance the IRS could reverse course. They could pull that ruling back, or Congress could jump in during this lame duck session and overrule the IRS and say, no, those expenses are deductible. I'm not seeing a lot of chatter along that way, but anything is possible. But right now, the worst case scenario is, to the extent you're forgiven of that loan, expect to have to pay tax on that forgiveness. And then finally, as we
Paul-
said, yeah.
Oh, sorry. So I do have a quick question for you.
Yeah.
We have been setting our programs up with CARES Act funding through the town of Windsor to really be more like assistance programs, because we were told when you use the word grant, then it can trigger the Single Audit Act. Can you speak to that at all?
No, I don't do yellow book government audits. So I'll pass on that. I'm not
Okay,
really-
I just wanted to double check if that's, we had heard that, so that's why we were just prefacing everything as assistance.
Yeah.
Yeah.
Yeah, whether nomenclature gets you around that, I don't know. But again, I'm not a government audit guru, and so a man's got to know his limitations. So I'm going to beg off, trying to give guidance.
Yeah. Okay, thank you.
And so the last thing here is, bear in mind, if you have to repay, a portion of this loan, my gosh, where else are you going to get a 1% interest rate right now? So a real bargain opportunity. So what else is there? For those of you that didn't get a PPP loan, first of all, I would wonder why you're on this call. But beside that, I just want to make sure there's some other things out there, whether you did a PPP loan or not. One of the items is we have this employer payroll tax deferral that allows employers to hold off having to pay in what they withhold from the employee's paycheck for the 6.2% Social Security tax. This is good all the way through the end of 2020. However much you haven't paid in, you're allowed to pay in half of that by the end of 2021 and the second half of it by 2022 without interest or penalty. Again, I anticipated that there were some self-employed folks that were on this call. And just so you know, when you do your 2020 tax return and you fill out that Schedule SE to compute your self-employment tax, when you work out the math, 40.5% of that self-employment tax, you can defer that as well and repay half of it in 2021 and half of it in 2022. So keep that in mind when you're doing your return and you're doing that SE schedule. You don't have to pay all those taxes right away. You can kick the can down the road a little bit. And I'm hoping by the time we get to 2020 tax returns, IRS will have more information and forms and things to assist folks in working through these particular items. Again, if you did not get a PPP loan and you have employees, there is an employee retention payroll tax credit. I've got the bullet points listed here. I'm not going to get into this into a lot of detail because, again, I'm assuming most of the folks on this call probably did get a PPP loan. So if you did, you're not eligible for this particular tax credit. And finally, what I wanted to share, as the PPP loan program was running out there at the end of July, early August, some of us in the office, because we spent so much time in this area, getting the word out, holding webinars, sending out alerts and all that, we kind of sat around here and said, well, did it do any good? What was the impact of these PPP loans? And of course, there's no mega data available yet on these programs. I'm sure there will be at some point. We'll see some large regional or national data on this. But we just said, let's take a little bit of time. We looked at our own client base, and we have more than 150 clients on QuickBooks Online. So we're able to peer in and pull out this data. So we were able to gather data from 130 of our clients. And it was interesting to see as a group, and we also did some industry segmentation as well. But in the aggregate, what we saw was our clients, their gross revenues weren't up or, real robust, but come on, being up during a pandemic is good. So, we saw some marginal revenue growth. We saw some incremental improvement in gross profit margins. Most encouraging was to see the and these are compared to 2019 numbers, by the way, to see salary and wages among our client base up nearly 9% compared to 2019 during this pandemic. That was a great, we loved seeing that. And then net operating income, basically net profits, up 7% compared to 2019 in the midst of a pandemic. And so, we came away feeling like, at least as far as this microcosm of data among our client base, we think the PPP loans was a godsend, was a savior for these clients. And what really blew us away, we knew we'd had a lot of conversations and webinars and advice and all that. But when we ran the numbers and saw that in the aggregate, just our client base, in terms of PPP loans and EIDL grants, more than $10 million of economic benefit to this client base, it really makes me wonder, if we could go larger, if we knew on a regional, national, statewide basis, I'd really like to see, this information broken down, not only just the PPP loans and EIDL grants, because you can get that through the SBA, but I'd like to see some information about impact on profits, wages, revenues, and all of that. Because from our little bitty part of the world, my gosh, it was a game changer for our group. So, and we do have that report on our website. If you want to download the white paper and see the industry segmentation, it's pretty awesome kind of stuff. So, did the PPP loans do any good? For us and our clients, it did great. So we really felt good about that. If you need some additional resources, we've created a special email box here, covid@muellerpiecpa.com, and we have folks that are monitoring that inbox. If you have some questions, feel free to shoot us an email there, and we'll get back to you with what we know and what we can share with you. Any of you that like to look at YouTube, we have our own YouTube channel. It's called Have an IPA with a CPA. We've got about 24 videos out there on various topics related to COVID, tax, and accounting. And if you look at our website, we have a page dedicated to COVID where we're continually furnishing updates, resources. We have calculators there. Just a lot of resources out there to help everybody get through this COVID pandemic together. And with that, Stacy, Brooke and I will take questions.
Yeah, thank you guys so much. That's such great information, especially for our businesses who are a little bit lost in all of the changes and transitions that have been going on since March, not only personally, but professionally and with the changes in that. So we do have one question in from Jamie, who says, Paul, can you touch on the tax write-offs again for a Schedule C on 2020 taxes? My understanding is your payroll and rent covered under forgiven loan cannot be included in your 2020 Schedule C. Is that correct?
I think they're saying the expenses cannot be deducted on the Schedule C. So remember, a schedule with a Schedule C, with a self-employed person with no employees, technically there is no payroll, but they did grant, and I'd have to go back to that slide. I think it was 15,008 something that is automatically forgiven off the top. It's the other expenses for rent, utilities, and interest that, to the extent those expenses help you qualify for forgiveness, then you're not going to be able to deduct those expenses on your 2020 tax return.
Okay, Jamie did that. Okay, I think she said thank you. So I think that covered her question. So if anybody else has a question, feel free to put it in the chat and or unmute yourself and ask Paul and Brooke directly.
I was going to say silence does not intimidate us, so we can outlast you. But if you don't, if you don't have questions now, or you want to ask in this program, again, you've got the email box there that we're monitoring to provide that information directly to you.
Okay, I'm not seeing any more questions, but I do want to give you a shout out because I subscribe to your newsletter, and so I do get your newsletter still. And I also have had to say that your videos and everything that you guys have been doing are a great resource for everybody. They've been just really, really helpful in watching and understanding and helping us try to digest. Me as a person who is not a CPA and not familiar with the tax law at all, trying to help our companies survive and stay alive. Very valuable resources. So I really, really appreciate all you guys and all the work that you're doing to help the companies. It means a lot. So
Yeah.
I'm gonna.
Stacy, we had it, we felt like we were at a crossroads in the middle of March. That's when everything went, we all went remote, and that's when, it seemed like the world was melting down. And when they extended our tax season to July 15th, we were at a crossroads, and it was like, what do we do? And it's like, well, the highest and best use of our time right now is to digest these relief items and get that word out. We could do tax returns later. Of course, except for the clients that needed their refunds, we were full speed ahead on those. But it was like, you know what? We've got a little bit of breathing room. The highest and best use of our time is to get the word out on this, because people are worried, they're suffering.
Yeah, and we still don't even know what the next 6 months is going to hold for sure.
Sure don't.
So, yeah, I know. It's been quite interesting. So, I do want to thank Paul and Brooke again, and I put their bios in the chat feed so you can see those. I apologize for not formally speaking about your talent to the whole group, but I have put those in there. I just will give you guys a shout out. You're definitely an amazing organization that has a lot of talent and knowledge. So definitely feel free to reach out to them and use that if you can. I wanted to let you know about a couple of upcoming crew events. So right now on November 12th, we are planning some sort of social event, and we'll get back to you with more specifics on that as soon as we finalize a couple of our issues with dealing with scheduling social events during a pandemic. So, and as we know, our governor's office keeps changing things as well locally. So we have to go by those guidelines as well. And then we are hoping, though, by December 9th, we will have our annual wine tasting and holiday party at Ptarmigan Country Club. And that is from 1 to 4 p.m. So we hope that everybody will be able to join us there, because I don't know how fun it is to drink wine virtually and try to express that to everybody. So, but definitely wanted to let you guys know about those events coming up. And again, thank you guys so much for your time. I think we'll go ahead without seeing any more questions. We'll end a few minutes early. Everybody can use another 7 minutes to go off on their day and solve another crisis that I'm sure has fallen at their feet. So thank you everybody for joining us today on behalf of Crew Northern Colorado. And Paul and Brooke, we extend a big thank you again for taking your time to share your knowledge with us. We really appreciate it. Take care, everyone, and stay safe.